Hey everyone, this is Wolf from EmpoweredTraders.com. Today, guys, I'll be showing you guys my stock watch list and potential trade setups for this coming week. I decided to do something a little different this week. Let's take a look at some Chinese stocks. Of course, if you guys have not been following the market recently, the Chinese stocks have been getting absolutely wrecked. It's down since the peak in February. The China A50, which is the most commonly traded Chinese indices offshore, is now down 30%. That's huge. Imagine the S&P down 30% on, the government policies and, them meddling in the private and the public market. So this is huge, and China is the second largest economy. So any investor should definitely be following what's happening right now and could play out in the coming months. So let's jump ahead and take a look. I'll give you guys some. I'll stay away from some of the fundamentals because I want to focus on the levels and what the prices are telling us, right? So ignore the noise, ignore the fundamentals, and let price tell you the story. And this is what price is telling us, okay? So we had retraced all the gains, right, in 2020 and 2021, pretty much all the gains. What's interesting, I think, is that the support, what has been support, is these levels here at around 14,500, and this level is so important because this level was the price levels before the crash in 2020, the COVID crash, as you guys can see here, right? So we're holding this key support level. So for one touch here, second touch here, and right now we're just kind of in the middle of this range. It's kind of neutral. We're holding this, but again, we have a lot of these two resistance level to break for price to look bearish again. And of course, we could be trading sideways for a while. If you look at KWeb, again, another this is a Chinese kind of tech ETF. You can see here, just like the China A50, also trading near critical support levels, you guys can see here. But what's interesting is that it could be trading sideways for a while. This is something that people may see, wow, Alibaba, Tencent, all these stocks are trading at a huge discounts, which they are on paper, right? However, you do have to understand that price could be trading sideways for a while. Look at this crash in 2018 due to the trade war, right? You guys may remember this. And that was pretty brutal in itself. Look at this, 45% down, not on a stock, right, guys? On an ETF. An ETF down 45%. But you clearly see here, a lot of people did buy down here, but what happened was, price just lagged, right? For a year and a half, from 2019 to pretty much April, so almost, a year and a half where price just trades sideways. So that's also a scenario you have to consider if you're looking to long Chinese stocks here. You're like, oh wow, look at this. We're at support levels. Maybe I'll accumulate some down here. That seems good in principle, but again, you do have to price, geez, what if it trades sideways for the next 1 year or in the next 2 years? That's definitely something you definitely have to consider if you want to buy Chinese stocks. And not even to mention, there could be more risk, right? Just because we held these levels before in the past doesn't mean we'll hold it now. But anyways, let's look at Tencent. So Tencent, just like the A50, right? Very interesting. And a lot of Chinese stocks are doing this, is that they would trace all their gains. And again, the price level right before the COVID crash in 2020 has held as support level. Very interesting. A lot of Chinese stocks are doing this right now, especially tech ones. And Tencent's a bit more looks a bit more bullish because we managed to break above the resistance level, as you guys can see here. So if we hold this level here at 64.30, that could be interesting, guys. Maybe you'll see a move higher. Maybe it'll trade sideways for a while before another move. Maybe before we see another move next year, potentially another wave next year. But as long as it holds 43.30, I do think Tencent looks actually quite attractive. Another one, of course, we have to talk about is Alibaba. And boy, this guy has, this stock, it's sometimes a little hard to fathom how this stock is down so much. Yes, it makes sense. As you guys know, with things happening with Jack Ma and the regulations and IPO, it makes sense. But still, guys, we're down 52%. And imagine Apple, Microsoft, the American golden companies, right? The FANGs are down 50%. And that would be pretty hard to imagine. But the thing is, that's exactly what's happening right now. with these Chinese companies. You know, these are golden dragons but yet fundamentally and price action, they're extremely bearish right now. But one thing interesting I like to point out is that this is not the first time. People see this 52%, they're like, okay, I'm not going to touch it. But interesting enough, look at this. We were down 52% back in 2015 as well. Very interesting. And if you kind of log this out, I'm not going to do this now, but if you log this out, you can kind of draw like a channel trend, actually, something like that. Yeah, this is not going to work on log. You can kind of draw a channel trend like that, which looks really interesting in my opinion. If you're a long-term investor, you know, these level here do look attractive to accumulate. But again, like I mentioned before, you know, we could be trading sideways for a while. Even if this is the bottom forming, we could still be trading sideways for a while. Just something to think about. All right, let's jump ahead and take a look at some U.S. stocks. So let's start off with Starbucks. So you guys can see here, I've been showing Starbucks for a while now. We're kind of heading up to a key resistance level. You guys can see here, we failed to break this resistance level back in September 1st, and we're kind of just chilling down at the bottom end of the support channel. And as you guys will see here, a lot of stocks are trading at support levels right now, and that's mainly because, you know, S&P had a few bad days. And also we're kind of testing these levels right now. As long as we hold the blue line, I think long trades do look attractive. But the moment we consolidate below, you know, a move to the downside could come really quickly. And the reason why, and in fact, I'm not going to buy or do a lot of trading this week just because of the risk that we could really have a small sell-off taking us all the way down. On the other hand, right, guys, we've held these levels. You can see here these levels before many times on the S&P. So what I buy down here, most likely it looks attractive, right? We'll see what happens. A lot of people are saying, oh, there's gonna be a huge correction in September and October, and statistically that's true. Statistically they are more likely to happen in September and October. So let's see what happens. But anyways, guys, Starbucks holding support. See what happens in the coming weeks. If it holds, great. If it doesn't, if it breaks this line here, indicated in yellow, that looks really bearish. Okay, so keep an eye on this yellow line. For Coinbase, also another interesting one. As I mentioned earlier, a lot of stocks are trading at support right now, so it is quite an interesting time because we could really break really fast to the downside, or we'll just reverse back up, you know, holding these support levels. But nonetheless, just like Starbucks, we're holding the yellow line, so keep an eye on this guy. Maybe we see a reversal, maybe not. On the other hand, if we do break it, that may seem attractive. And of course, this will largely depend on what Bitcoin does. And right now, you know, could this be a bottom forming with the crash we had yesterday? Maybe. Again, you gotta manage your risk wisely. Another one, Autodesk, looks pretty attractive also. We are testing key support again, just like many other stocks are. And yes, we may see a swing, but of course, a line to keep an eye on for is this blue line. If we do break this blue line, however, we still have this support level down here, as indicated in the yellow line, right? And the reason is because, look at, you know, we made a touch here and also here. So we may come back down to test this level here, and that to me does look pretty attractive if we come back down to this level down here. Okay, AZZ, also another stock trading in a really nice channel trend. Of course, this one's a little bit early, but it is an interesting trade setup. We may come back down. We may see a resume off here. We also could come all the way down here, zoom off. And of course, we have this support level here corresponding to this level. So these are three potential entries for this stock. But again, this stock is still kind of early. This stock is more if the S&P come back down to this level here, this blue line here, it is an interesting stock. Sorry, it is an interesting stock to keep an eye out for, because when the S&P does say it does have a sell-off in the coming weeks and come back down to these levels, a lot of stocks going to be trading at support and going to look quite attractive. But anyways, next one, silver. Silver, of course, I should have mentioned this last week. Excuse me. You know, we came all the way down to finally had a wick which tested this support level at roughly around 22. We held it, came back up, but nonetheless we're still stuck in this channel trend, right, guys? We've been in this channel trend for more than a year, right? Since August of 2020, for more than a year, we've just been trading sideways. Nonetheless, it still looks attractive, right? As long as we're stuck in this range. If say we get another retest, that may be interesting. I should have long here when we came back down here. I missed that trade. That did look really attractive, and the reason for that is because this is such a because this is such a critical support level, right? Say you long at 22.3, you can have a really tight stop loss. Say you long at 22.4, let's go with that. You can have a really tight stop loss, maybe 3% or 4%. While your upside could be huge, right? 30%, because you're risking 4% for a move back up to the top end of the range, which is really possible because we've been stuck in this range for a while. This is a really strong pattern. So this does look attractive. And lastly, let's take a look at gold. Gold is also pretty interesting also, but the structure is also a little different. But what's interesting of gold here, and again, this is kind of like a theme of this video, is that we retrace all the gains made in 2020 and 21, and look, the support level we held for 3 times, right? Look at this, 1, 2, 3. This key support level at 1680 corresponds with the price levels right before the COVID crash. Interesting. That just seems to be a really common occurrence in this market right now, especially stocks are down a lot. You know, the price level right before the COVID crash in 2020 seems to be served as a critical support level for a lot of stocks, a lot of commodities, a lot of assets. But anyways, let's take a look here. So we came back down. Looks like a breakout. See, you can see touch here. Came back all the way down to this level really quickly, but we did come back up quickly. We had another touch here, which makes price looks pretty bearish again. And again, we're off. But of course, we still have this key resistance level to keep an eye on for gold. Until then, it does look somewhat bullish, but it would, in my opinion, it would look way more attractive if we do break this green level. And I think a lot of traders will jump in once we break this green line. And last thing, just go through the economic calendar really quickly. Thursday, we do have an initial jobless claim, some oil data coming out, and of course, we have the PPI. So some data coming out, definitely keep an eye on that. Maybe, especially the initial jobless claim, maybe you see that bringing some volatility to the market. And I hope it does, because, you know, right now, it's although few stocks are trading at support, you know, it's still, you have to keep in mind, S&P is not down that much. So if you really want to long all these stocks that are trading support, betting on a reversal, you might be right. But at the same time, right, the S&P is not down that much, guys. If the market really turns against you, you know, that could be really bad. That could turn bad pretty quickly. So definitely keep an eye on the S&P. Definitely keep an eye on the initial jobless claim data is coming out. And of course, for those of you guys who want to create Coinbase, also even crypto. A lot of action seems to be happening in the coming, could be happening in the coming days. You know, we just had a 20% crash yesterday, so exciting week. A lot of things gonna happen. Stay sharp, stay tuned, and of course, if you guys enjoy my video, please subscribe for more content.